Hello, everyone. Happy Tuesday. How is everyone doing? Let's see who's here. Good morning, Patrick. Sterling, your 0 day TE options trades. Powell almost wrecked it. Gosh darn Powell. Gosh darn it. Be prepared for more and more volatility still coming up. So just always be prepared for that. We got lots of Fed speak today, but I'm glad it worked out for you, Sterling. Thanks for posting the Red Book number coming in 5.3 up from 4.4. Red Book still printing decent numbers. Good morning, Jacob. What else do we have? Well, ILA President Union wants how about a 61.5% yearly return? I want a pay increase like that. Jeez, this is gonna be a nightmare. Sonos, I didn't see this one. Sonos leaders to forego bonuses after failed app release. Yeah, the app release, I have a lot of Sonos equipment and it was a disaster. A disaster. What else? We got a lot of things. Jump in CVS to lay off nearly 3,000 workers in cost-cutting drive. Good morning, John. Good morning, McRangers. When are all these layoffs going to start showing up in the unemployment numbers? Have the windows been dressed? The windows were dressed yesterday. Now we're starting Q3. Good morning, Ted. So, where do we sit today? So what else do we have? We have the S&P manufacturing 15 minutes after the cash open. ISM manufacturing still expect to be in contraction 30 minutes after the open. We got the Jolts job openings and job quits. So do not ignore 10 a.m. We could get some volatility in at that time. Also, keep an eye on ISM manufacturing prices. Just keep an eye on that to see if they bump up more than prior. Consensus is 53.3. See if they bump up from there. Then we got the Dallas Fed services at 10:30 Eastern. Then we got a ton of Fed speak today. So Powell was, I don't know if you call it hawkish, but he was trying to maybe talk the market down from expecting all these rapid 50 basis point cuts. But what did Goolsby? Geez, we just have to take it back to zero. Essentially, we're gonna have many cuts. We're gonna have so many cuts. We're gonna make everything fine through cutting and cheap money again. Hey, Charles. So, what else do we have? That's really about it. Pre-market kicking off. Final quarter of the year, we got comm services, Google and Meta up, Apple down a little bit. Very mixed. Oil pulling back. Oil still in potential double bottom territory. Groups, we have comm services leading, but everything else rather mixed, and energy is pulling back. Fed watch. We were favoring slightly that 50 basis point. We're now back to favoring the 25 bips cut for November. And overall, probability wise, then still favoring a double cut in December. Fear and greed was an extreme greed yesterday. Right at that edge, right at the edge of extreme greed and greed again. Nothing shaking the market. And Schiller PE back to 37. Complete nosebleed territory. Like companies are going to be growing earnings like no tomorrow. All right, we have Nike after the close today is the only thing that I'm worth watching for me. Going into stuff, let's see with the S&P. All right, well, you had it come down with this volatility. You got the J-Pow volatility, the afternoon window dressing. Double never officially triggered. It confirmed, but never officially triggered on the 4-hour. So if you're trying to do anything from the short side, it never officially triggered and then invalidated. Right now, this is just a royal mess of everything. A royal mess of everything. If we do break out today up. Again, we're still cycles on the daily are trying to turn down, but we have really nice levels. If this can get above 58.21, retest the high from last Thursday at 58.30, and then we have 58.39, and we have a cluster at 58.48. To the downside, very, very strong support. Right around, let me flip this real quick. Let me flip this real quick. Very, very strong support between about 58.79 to 57.89 to 57.81. So on any sell-off, that's where I'm going to be watching for key support to come in. If we close below 58.71 over the next couple days, and I'll watch for a potential retest of the spike low from JPOW, 57.56 area. What else? It has officially begun. Over 50,000 port workers across the United States are now on strike for the first time since 1977. I know things are so similar to the 70s, except for in the 70s, at least we had good music. Now we have utter crap for music. These ports handle nearly 40% of all U.S. imports and could cost the U.S. up to $5 billion per day. So what does it mean for the economy? The current ILA contract has union members making a range of 20 to 37 an hour, depending on seniority. Longshoremen can make between 150,000 and 250,000 annually under current contract terms, and they want a 60-something% raise. All right, the ILA is targeting an increase larger than 32% over 6 years. Wow. Okay, so wonderful news. Yeah, we go. And this is inflationary too. Not right away. Not right away, but this can have a ripple effect. Lots of things are setting up to be inflationary, or even if we go into a recession, keep prices at an elevated level into next year, especially next first quarter. So, NASDAQ. By the way, let's just see what this looks like. This is a horribly sloppy double. It still technically does qualify barely. So if we do close below JPOW lows, we could easily start seeing a little bigger pullback, but still at this point in front of 56.58. Nothing seems to shake this market in the short term. NASDAQ, the only thing that gets me in bullish mode in the short term is if we close above 20,381. Other than that, my key resistance is still 20,328. And support area for me is about 20,117. So that's what I'm watching for. If we close below there, no, sorry, key resistance for me on a closing basis is 20,357. Not the number I said before. If we get above 20,357 on a 4-hour close, I'll tip to a retest of the high area from the 26th of September. Support 20,176 and then 20,116. And you have a lot of support base in here. The only thing that can start tipping me bearish if we start closing below 20K again, and that's short-term bearish, not long-term bearish. The Dow, we'll be paying attention if we do close within a rotation zone. Otherwise, watch this level as major key support. It's been tested many times. Tested with the low back on September 20th, tested on the 25th, tested on the 26th, tested yesterday. So 42,245 is key. All right, to the upside, I just used these little harmonics from the high on Friday to the lows yesterday. And the key thing to watch for me will be 42,720 on a 4-hour closing basis. Russell, not much to talk about here. Strong support at 22.17, 22.18. Very key resistance 22.56. VIX still staying a little elevated. Still staying a little elevated. Won't get into overly bullish mode unless it can start get dropped below 15. Overly bullish mode. That's where that is. The DAX so far basing sideways with cycles rolling over. So I'm watching the key highs and lows from Friday. Friday in the DAX. Remember, if the DAX breaks out to the upside, 20,127. The notes, still a sideways correction with cycles moving up on the 10-year notes. Very key resistance is 114.30. The yield moving sideways with the cycles moving down. Trading against 3.73, but if we do break down, my very key level is 3.7 to watch for. That would take it into a little more of a pullback correction, but then we'll be watching potentially for another push up. This could get interesting in the yields on the 10-year. The yield curve 10-2s are pulling back a bit after hitting the second target, but still well above zero. Dollar index pushing up. Dollar looks like it's getting finally into a strengthening pattern. We're going to make sure today closes above the rotation zone, roughly about 100.7. 100.7, yeah. But remember, we have waning momentum, and we started diverging up here. So now I'm going to watch for sort of a bigger bounce in here, at least into the weekly rotation zone. So we've held here. You can clearly see that divergence on the weekly and moving back on up. Watch if we do close this week higher than last week. We're not close to week's end yet, but do pay attention to that if I forget to mention it again. Crude still in double bottom territory. Potential. The only stuff that would make that trigger is a close above 72.40. We did not follow through above Monday's or Friday's high with the close yesterday, so no percent B buy. Still watching for any buy setups with cycles getting to the bottom against very key support. But from my perspective, there's nothing yet. Gold. Watching, we had a couple day pullback. Now watching for with cycles coming down, some kind of short-term buy setup. That's what I'm keeping an eye on with this. And then from my perspective, here's exactly the way I'm looking at it. If we then follow through and get that 4-hour close above 26.85, going to watch for the retest and the potential breakout to new highs. So we get the close right here. Would definitely be an area for me to move up a stop on any buys. And then, remember, above the 62.5, we target the 87.5, well, at least I do, which is back to 2,700, which would be another stop raise area. These are on short-term trades. Long-term is still bullish. And then I'd be watching for the breakouts. All right. So that's where that sits. And at least we have some pausing bars now, so we can put on our new harmonics. Just want to see what this looks like on the forward and the reverse. The reverse aren't going to give us anything unless you're really short-term trading. So the forward, the next level is going to be 27.35. Next minor level, next major level, 27.60. This port strike is another factor that will contribute to market volatility in the year end between the election Fed. Well, let's see. I mean, this port strike better not go on for too long. Better not, else this could get real interesting. it's going to get real interesting. Yen also. So far, pay attention to where the yen closes in relation to yesterday's high. It's not a, it's a technically a percent B buy. Yen's trying to also bottom out and start weakening again. But going to be paying attention to, we also have this channeling up and we have a potential inverse head and shoulders. So I'm keeping an eye on that right now. It's still fighting against the cycles going down. Euro is trying to weaken with the dollar trying to at least bottom. I'm paying attention to where we closed today with the euro 110.81. I'm watching that. We close below that. I'll be watching for a retest of the low area back from middle September, September 11th and 12th. And this is technically a properly formed potential double top. So, taking us could potentially take us back to the low area from the 1st of August. So this is a setup I'm starting to pay attention to. Not close to triggering yet, but I am paying attention to it. All right, spiders. Little gap down this morning, 373.15. First thing would be for the gap fill, 373, 573.76. And then we break above it, above this harmonic level, which is held for 3 straight days, 575.90. And then the next major harmonic is 578.88. So those are the targets to the upside. So far, this would be a pretty routine sideways correction with daily cycles trying to turn up again and dip into the rotation zone. So I'm watching for those potential buy setups. The only thing that gets me for pullback mode is we start getting below 568. J Powell lows from yesterday. The Qs, watching for the buy setup potentially here too with the pullback in the rotation zone and the pullback against key support. Again, the only thing that puts me in short-term bearish mode is move below yesterday's lows. We do have cycles trying to roll over. You're welcome, Andrea. Thank you for tuning in. Thank you for chiming in the chat. It's nice to see you here. All right. Tesla, I don't know if the delivery figures are coming out. I have not looked yet. Whether the delivery figures are coming out today or tomorrow, but we'll keep, that's something I have to look up after a return to the high area from July. By the way, if you're playing Tesla from the long side, and it's gonna which if they beat may break out still in the short term, the harmonics I would use would be 282.13 and 293.25. We start dropping back below about 250. Gonna start watching for the pullback, and remember earnings are in a couple weeks. Nvidia really petering out here. Really petering out here. If this keeps extending to the right, it's going to take the potential double off the table, but nothing yet. I'm keeping an eye on yesterday's high, or last week's highs and lows, by the way, in Nvidia. No, I look for selling just generally. Again, I look IV ranks over 100. I will look if, again, when premium's expensive, I do look to sell premium, because even if you get the direction or not, the levels not exactly correct, once volatility starts coming in, anything with the short Vega component, you can even make money if you don't have the direction or the levels entirely correct. So keep that in mind. That's why I would not be a buyer of premium here unless it was part of a leg to offset something like China. You have the massive breakout here, but this would be an area that I'd be looking to potentially, and I have nothing on with this, so, but I'd be looking to harvest some volatility out of this. Harvest some volatility with a vertical move up, especially if it could set up something like a butterfly or a condor to harvest some volatility. That's what I'd be looking at on any pullback, because see, you're against very key resistance up here. Very key resistance is an area. So you're very key resistance and you're above very key support. So that's what I'd be focused on with something like that. Personally, can't give you specific trading advice, but that if you're structuring a trade, that would be what I was be looking at. Also with BABA, especially if BABA continues, if it could get a push higher, especially closer to this 120 area, I'd be really looking at setting something up against very major resistance to harvest some more volatility. And right now, the short-term support's right around this 100 to 103 area. All right, let's just glance at the S&P. Going into the open, then I got to run. Take care of stuff here. Into the open, very key supports 58.02 and major resistance 58.18. So unless we start breaking down below 58.02, but there's a lot of key support levels here. So unless it's a really momentum trade to the downside, I gotta watch for those support levels kicking in. And to the upside, the very key resistance is 58.18 to 58.20. And with that, I need to call it a day. Everyone have a wonderful trading day. Thank you all for tuning in. Bye for now.